Hello, this is Jeb Hamwerger from goldstocktrades.com. Today we have a new and special guest with us, Danny Callow, who is the CEO of African Gold Group, which is going through a very transformational year. It's been brought to me from some very important shareholders and subscribers, intelligent subscribers, that said this is a company that's under the radar, but there's a lot of value. And I've recently become a shareholder, and I'm hoping to get this story out to my audience. Thank you, Danny, for being here with us today. And for first of all, give us an introduction to your background and why you're so excited about African Gold this year, which can be traded as AGG on the TSX Venture. It also can be traded as AGG FF on the OTCQX for the US shareholders. Thanks, Danny. Please give us an introduction to your background and what makes you so excited this year for African Gold Group.
Thanks, Jeb, and thanks for inviting us on. It's going to be an absolute pleasure to give you some background on this, what we consider to be an amazing hidden gem on the TSX.V. So my background is I'm a mining engineer. I've probably spent around 29 years in Africa building and operating greenfields and brownfields mines. I have worked in small mining and operations like this, but also in very large corporates. And my previous role prior to joining African Gold Group was I was the head of African copper for Glencore International. So I have had the experience of building some fairly large projects in Africa, all over Central Africa, now West Africa. And I left Glencore in March of 2019, and this project came along. And as we go through the presentation, I think you'll see where my passion lies in this project, because it really is a project that needs to be built. It's permitted, it's construction ready, it has a sizable resource. It's in gold, which is obviously still pretty hot property right now. And it's in a jurisdiction in Mali that, although sometimes Mali gets a little bit of a bad rap, it is a really strong mining jurisdiction. In fact, I think it's around the third or the fourth largest gold producer in Africa. Very, very solid mining code, and very investor friendly. So I guess as we go through the presentation, I can talk to some of these things.
So Danny, you're a mining engineer. You've worked for majors, and you've helped bring mines into production. So that's very important for investors to hear when you're looking for investment in the gold company. One, to see a mining engineer in charge. Two, to see someone who has past production experience that can bring this production and to have the confidence of the market to finance it. So could you repeat that one more time about your background and your experience with production?
Sure. So my background is I'm a mining engineer. I've spent the last 28 years in Africa, specifically building, operating, and running greenfields and brownfields mines. So I've had experience pretty much 50-50 in both. So greenfields is obviously taking this thing from the ground up, designing it, building it, ramping it up and operating it. And then also taking brownfields operations that either go through an expansion process or need to be fixed and brought back into efficient production. So I've done all of that. Probably in the last 28 years, around $3 billion worth of project work in taking these mines into production. And some sizable mines. I think at our peak, we were producing around 500,000 tons of copper a year and about 45,000 tons of cobalt. And we were operating the world's largest cobalt mine at one stage. And you know, my background, having started in gold, has been across a number of commodity units. So open cast, underground, I've pretty much done everything in the last 28 years. And my passion here is really being able to take a project like this, from a definitive feasibility study that we have now right through into construction, commissioning, ramp up, and full operation for a number of years. So that's what we're looking at on this project.
So Danny, tell us how it's going to be a transformational year for African Gold Group.
Sure. So last year, obviously, we know we had some challenges on the COVID side, but we still managed to deliver a very robust definitive feasibility study, which I'll happily share some numbers with you later.
Yes.
That definitive feasibility study was absolutely key for this project. It was independently done by experts that understand the gold industry. And what we managed to do up until then was really consolidate all of the historical drilling, all of the historical regional geology data, all of the metallurgical test work, plus add in a whole lot more drilling metallurgical test work and pull the whole thing together into really a ready to build project. And that's what we did by sort of late last year. Subsequent to that, we then obviously put some drills back in the ground. We have this massive exploration upside here, which we'll talk about. We put some drills back into the ground in the third and the fourth quarter last year, and really got ourselves into a position by the first quarter of this year where we are in a position to upgrade already the definitive feasibility study through an upgrade in resources and reserves, and that process is ongoing. The other thing that we did, which I think was very key for us over the course of the last 19 months, is we've really had a look at the corporate structure here. So this was a company that had been through a number of mine owners. It was really in a sort of a holding pattern in terms of where it was going. And really what we did was from 2019 was get the bull by the horns. We restructured the board. We changed out most of the management team. And in the first quarter of this year, we sort of completed the third part of that after restructuring the board and changing out the management team. And that was effectively taking ourselves independent. So prior to that, we were in the Forbes and Manhattan stable. I think that it was the right time to move out of that stable. In March of this year, we terminated all of the relationships there, including consulting agreements, office services agreements. And from the 1st of April, we've operated as a fully independent company with a reasonably strong institutional shareholder base and a management team now that is very focused on taking this project through into the next phase of development, which is construction.
Danny, very important, the strong institutional base that has already committed to the project, fully independent now. You have a very strong institutional base. Could you give us some more details about that?
Sure, I can actually I have a slide on that, which I think is
it's so important. Yes.
Yeah. So look, I mean, I guess let's just backtrack a bit, Jeb, to sort of late 2019. We were sitting in a situation where we had a very strong North American retail base. They've been very supportive to us, but we had a very small institutional shareholder base. And obviously, if you're looking forward into taking this project into construction, it's absolutely key to get some of these institutional shareholders on board at an early stage, because hopefully they're the shareholders that are going to take you into the next development phase, which obviously needs a fair amount more capital to build it. So of the major shareholders that you see in the bottom left of this slide, all of those have been extremely supportive of us. They understand the story, they understand the path that we've followed. We've spent a lot of time talking to them. They've continued to buy not only through private placements, but also on the screen, so on the market, which is really important to us to start to get some volume in the stock. And all of them have suggested that once we get to this main capital raise, they will all be quite keen to participate in that on the equity side. And I think for us, that is really comforting that we have a strong base, 33% now versus probably 8% when I started. And we've really made an effort on two fronts, Jeb. One is to bring more institutional investors on board, but two, to also try to get the story out to a wider audience. So we've really geographically diversified that institutional base. That is important. You know, we talk to people in Australia, we talk to people in Europe, Asia Pacific, and London now. We definitely have a slightly bigger reach, and I think that's important for us that we continue to talk to people around the world. But notwithstanding that, our North American base has been very supportive of us. It is really the the foundation of our shareholder base. So we do spend a lot of time talking to the North American, Canadian investor community.
You know, what's so interesting is when I look at these companies, you see here the options on this slide, the share structure, 20 to 28 cents, warrants 15 to 40 cents. And the stock is trading very low when you see it's undervalued when you look at the share structure. And when you look at the recent feasibility study, could you highlight from your perspective to new shareholders the undervaluation, especially when you see gold now at prices at $18.50 an ounce?
Sure. Yeah, I think, you know, we unfortunately we're in this sort of holding pattern, I guess, of being in between an exploration play and a producer, and if you want to call it a development asset, that's probably the right word. I think that when you're drilling, you're able to release a lot of information to the marketplace. Clearly, exploration right now has been really picking up on the back of rising commodity prices across all commodity groups. And, you know, although gold is off a little bit from its 2000 highs, it's substantially higher than it's ever been. So, you know, I think that there's a huge amount of optimism about an ongoing strong gold price. You know, but we're competing in a pool of you know, dozens and dozens of explorers on the TSXV. It's very difficult to basically get your head above the parapet and really shout from the rooftops that we're an asset that is ready to construct, which is significantly different to someone that still has 2, 3, or 4 years of drilling to do, and then goes through the whole process of all of the studies that you have to do to bring this thing to where we are. The second thing is that we're permitted. So this is not a case of drilling through on an exploration permit. We have a mining permit, and we have all the permits in place to be able to start to construct this thing. So I think that we've done a good job in getting our name out there across a wider investor base. But there's a lot of choice. There's a lot of choice if investors want to invest in a pure explorer, and typically those guys are a few years away from where we are, or a producer that is also, you know, bringing some cash flow into the company and potentially some dividends as well. So I think we're in this cycle of competing in a fairly active pond, and you know, we are doing our best to get the message out there. But for me, it's a very simple equation. This is a fully permitted, ready to go mine, 100,000 ounces a year, very, very low capital cost for what we're going to deliver, very low operating cost, very low all-in sustaining cost, and something that we could, once we start construction, bring first gold in 19 months. And if you have a look at some of our peers, Jeb, those guys are trading at, you know, 150 plus million Canadian dollars, and we're sitting down at around 30. So
do you have a slide that shows any of the peers and the valuations?
I don't think I've got that on this. We'll have to do that for another call. We had it, but this is the latest presentation where we dropped it off. But I mean, to give you an idea, if it doesn't matter what you have a look at, if you have a look at EV to total resource or EV to total reserve, right, we're sitting down at between $8 and $10 an ounce, whereas most of our peers are sitting up at the $30 to $50 an ounce. If you have a look at the research that we are having, or we're being followed at the moment by on research coverage, there's target prices there for 69 cents versus our current 16 cents. So, you know, it doesn't matter whether you look at valuations around the share price or valuations of gold in the ground. These are crazy numbers. These are numbers that we should be 3, 4, 5, 10 times this for the position that we're in.
Well, let's see why we could be undervalued. Is there anything jurisdictionally, like some of the popular names are in Burkina Faso, like that have been, you know, favorites that are getting those $30 to $50 an ounce valuations, like Rocks Gold, and maybe is it jurisdictional, or what makes you think that why we're so undervalued?
Yeah, I think jurisdiction is important. We operate in Mali. I think if you type Mali into Google, you'll probably come back with something saying don't go there. I think Mali gets a very bad rap from a security perspective, but I think that it's also important to point out that every single major gold miner is operating in Mali as well. So Iron Gold, Anglo Gold Ashanti, Barrick. Um,
B2.
yeah, B2 Gold, and they've been operating there for many years. So yes, security situation you have to take cognizance of, but I think for me what's important to get out there, Jeb, is that the security situation, Mali is a country of two halves. You have the center and the north, which is pretty much a red zone, a no-go zone, and then you have Bamako, and then west and southwest of Bamako, which is pretty much a similar security situation to what you would see in Senegal, Guinea, Ivory Coast, and it doesn't really sort of come across when you do your research on the security side. So we obviously have a security force on site, but to give you an idea, that whole western side of Mali where all of the gold mines are, there's never been one day where any of those mines has ever been stopped for any form of extremist activity. So,
and you have a map on here, so maybe you could show us graphically.
Sure. I don't think it's in this presentation either, but let me just see if I can. Yeah, I think this is the latest one, which we've taken it out, but I can probably find one, but I can send you one and a sort of a layout of, our neighbours are Hummingbird Resources, listed on the London Stock Exchange. B2 Gold is not far away. So they're all big mining companies producing multiple 100,000 ounces of gold per annum, and it's a very good environment to operate. So I think that jurisdiction does play a part. Certainly on the retail side, any bad news in Mali and it seems to create a little bit of panic selling. Politically, Mali is obviously a little bit volatile as well. So take away the security situation, it's a little bit volatile. We've obviously had a coup in 2020 that formed a transitional government. That transitional government is under transition again. But ultimately, what this is leading to are democratic elections in March of next year. And frankly, our dealings with the transitional government have been very positive. So I think that, again, although a military coup is never a good thing, in this case, I think it's transitioned into something that is going to be better for the country. So again, I think the political side is possibly seen as a negative, but I think it's actually a positive right now.
And it seems that the gold industry has all been going full speed throughout all this coup. It seems like the gold industry has been pretty much insulated from, and there was no violence during this coup. It was a peaceful coup, so that investors should understand that. Am I correct about that?
You're correct. I mean, I know it sounds like a little bit tongue-in-cheek, but it was effectively a textbook coup. The president was arrested by a military junta. He was taken into incarceration for 2 days. He voluntarily stepped down. There was not one shot fired. There was not one person injured. The transitional government was put together from multiple opposition parties as well as the incumbent party in power and some military, and it all happened in a completely peaceful way. And again, when I explain to people that the day after the coup happened, we were in Bamako city centre and the banks were open and people were going about their businesses though nothing had happened. So I think that there's no such thing as a positive coup, but certainly in this case, it really did force a transitional government to come in that was more representative of what the nation wanted, which is important, and ultimately will lead to ongoing free and fair democratic elections, which are equally as important going forward. So we're very positive about the outlook in Mali from a political situation. I think it's all going in the right way. And coupled with that, the government also brought in a new mining code, which was very fair to obviously the government and also to industry. And that it actually came in last year, although it's called the 2018 mining code. And therefore, we're very confident that with that mining code, we are going to see a lot of stability in the government side in terms of administering the way mining happens in the country. So all in all, I think it's very positive.
So what should investors be expecting over the next, how would you see the scenario with financing, construction? When do you think this will eventually, if gold stabilizes here, let's say at $1,850, $1,900 gold, what's your scenario here of getting this mine built?
Well, let me just flick to a slide that I think will probably talk through this a little bit better. So I guess in terms of financing strategy, we've sort of hedged our bets on both sides. We've looked at a number of different options, and we continue to do so. And we review this regularly in board meetings in terms of future strategy. But there are effectively three options here, Jeb. The one is that we continue to put the drill bit in the ground and explore for the next 18 to 24 months. And there's some opinion from some of our shareholders that see that as a good opportunity. We believe that in 18 to 24 months, we could be a 1.3 to 1.5 million ounce reserve. So sizably bigger than it is today. And then obviously, the second option is to go full speed ahead and try and raise the money to build this project. It's a project that needs to be built. When I talk to you in a minute about some of the costs in terms of capital and operating cost, the free cash flow in this project is crazy. It needs to be built. So there's obviously a move to do that. The challenge that we have right now in terms of raising the money that we require to build this is that your equity holders currently would be diluted significantly because of our market cap, and we would probably struggle to get debt at a reasonable cost of capital that would be fair to the equity holders as well. So that's not to say that that's not going to happen. We're in some very, very confident discussions with financial providers that are very keen to build this thing or provide the financing for us to build it. And we believe that there are ways in which we can raise the debt initially through a mix of export credit agency debt, which is obviously low cost of capital, some senior debt providers like the big banks, and then maybe a sort of a blend of some mezzanine or hybrid debt. And then I think once we raise the debt, the equity will follow. And as I say, we've spent a lot of time building up a good relationship with our current institutional shareholders, and we would hope that they would come in terms of the equity. And then the third thing is, which obviously you can't avoid in this game in gold in West Africa, is possible M&A or other corporate activity. And you know, we have had a number of approaches, and we've also had a look at a number of options. And I think it's important to keep that on the table, you know, even if nothing happens with it, because it definitely is a strategic opportunity as well. So if you have a look at it in terms of three phases, it's either putting the drill bit back in the ground and growing the resource and the reserve quite substantially over the next 2 years, or continue to push ahead with raising the capital to build this project. And we're confident that that will happen. It takes time, there's no doubt about that. But we are a fair ways down that way, Jeb. I mean, we have a number of institutional or institutions in our data room right now going through the due diligence process, and those discussions are ongoing. And then there's obviously a possibility of various types of M&A or corporate activity. So, you know, I'm not saying that that's going to happen, but it is a possibility when you just have a look at how active the M&A space is in the West African gold industry. So I think that we're open to discussions. We're open to looking at all options. But this is a project that does need to get built, and we've spent a lot of work getting it into this position right now.
Danny, show us why this project should be built from an economic perspective.
Sure. Let's just get there. So as I said, we delivered a definitive feasibility study in July last year. That feasibility study is currently being updated to include additional drill holes that we drilled. What do we expect to see in that? Probably an increase in resources and reserves, and also probably an improved economic model. But just to take last year's, this is key. We did the base case scenario in June last year at 1530 gold. Now, it doesn't matter what your sort of opinion on the gold price is right now, but at 1760 gold, you can start to see some significant jumps up in NPVs and IRRs. So if I take the base case, 226 million after tax NPV, 41% IRR, and a 3.8 year payback, that's at 1530 gold. If I take it at 1760, which is still lower than today, you're talking numbers up at 330 million. So arguably at spot today, you're probably at 400 million after tax NPV, probably closer to about 58 to 60% IRRs, and a 3-year payback on a 10-year mine life. What does that translate into? Well, it translates into some very substantial project cash flows. It gives us 100,000 ounces a year of average annual production at an all-in sustaining cost of $782 an ounce. And when I talked to you earlier about the substantial free cash flow that we have on this project, at 1,800 gold, and you're delivering gold at $782 all in, there's $1,000 free cash flow margin in the mix there. And I think that's what really lends this to taking this thing into construction and production. We'll produce around 755,000 ounces over the mine life. It's pretty much split 5 years at 100,000 ounces, and then it tails off a little bit. That 755,000 ounces will grow now with the current upgrade to our resource and reserve models. So we're targeting 1 million ounces. We'd like to get there. I think we'll be very close. And as I mentioned before, this is a project that is fully licensed and permitted. So, you know, these are really, really compelling numbers in any feasibility study. And as I say, this is at 1530 gold, and we're sitting at an 1860 gold price environment right now. Again, I think one of the questions that we get a lot, Jeb, is your grade is a little bit low. So our overall reserve grade is running at about 0.87 grams a ton. There are plenty of operations out there in West Africa at these prices making substantial free cash flows on that number. But to give you a little bit of comfort there, our operating costs come in at $704 an ounce. And if you have a look at the bottom graph here, I know we don't have an investment comparison against our peers, but we do have an all-in sustaining cost comparison against our peers. You can see that this yellow bar here, which is us, is right down at the lower cost quartile of all of our peers in West Africa in terms of all-in sustaining costs. So we really are sitting in the right part of the equation here. Obviously, as well, what happens is, you know, a low grade is one aspect or one input driver to a mining process. The things that we have in our advantage right now that really offset this slightly lower grade is that our geology is very simple. And I don't want to get into a geology discussion, but we are typically mining oxides sitting on top of a very small transitional zone, and ultimately we'll go into sulfides below us. We don't have this very mixed up geology like a lot of these mines have, where it's very difficult to separate oxides and sulfides out. We are only talking here about oxides. It's also free dig. So we don't have to go and drill and blast it. We literally put an excavator in the ground, we pick up the earth, we put it into a truck, we take it to the plant, and we put it in the plant. So it's a very straightforward mining operation, a very low stripping ratio, 2.76 of tons of waste for every ton of ore that we take out. And that really keeps our mining costs very lean and mean. Coupled with that, because it is a free dig operation and the material is very soft, the upfront crushing and milling that is normally pretty expensive in part of a mining process is almost non-existent here. So it's very soft, and that allows us to really bring the cost of power down to very low numbers. Coupled with that, we've decided to go for a hybrid power plant. Now, to put this into perspective, Mali doesn't have a big electricity grid like you would typically see in other parts of the world. So therefore, almost every single mining operation in Mali has to produce its own power. And typically in the past, this has always been through these big diesel or heavy fuel oil generator sets that are expensive, environmentally unfriendly. And we've gone the other route. We've partnered with a company that will provide us with solar power mixed with battery power, and then also some generator power through the night. And that allows us to really reduce our cost of energy down from probably 30 cents a kilowatt hour to 15 cents a kilowatt hour. And all of these are big savings onto this operating cost number of $704 an ounce. So look, I think that grade is often seen as a possible issue, but what I've tried to show here is that you can offset that grade against all of these very, very favorable input parameters that give us this $700 an ounce operating cost and $782 an ounce all-in sustaining cost.
So this is what you think is going to be the transformational year. I mean, we've had a transformational year with gold price. You please tell us why you think, in conclusion, if you could explain why you think that this is the year that African Gold Group, AGG, and the TSX venture is finally get the recognition that it deserves.
So I think we've been leading up to this year for the last 2 years. So really this was a process, as I said, of cleanup, additional information through drilling and metallurgical test work, restructuring of the board, the management team, and going independent. We've done all of that, and we've done all of that by the first quarter of this year. We're now in a position that we have had a number of fairly senior service or financial, institutional, and financial investors in our data room. We've had some very positive feedback from them. This process does take a while, but we've had them in the data room since September last year. So we would certainly expect to see by mid-year, when the new feasibility study comes out, or third quarter, I guess hopefully some term sheets on the table with a view that we would be looking to make some form of major announcement, hopefully in the second half of this year, which would either be having raised the money to build this thing, or a substantial improvement in resources and reserves that will give us a lot more ounces of gold, or some form of corporate activity which would obviously create significant value for our shareholders. So I would be very surprised if one of those doesn't happen through the sort of second half of 2021. And I think that's why you're going to see this possible huge uptick in our share price. It's a great time to get in now, and I think that you know, we've got a very, very supportive shareholder base that has been with us through these 2.5 years of getting this project right, and now we need to basically pay them back through value and I guess future cash flows.
So today we have with us Danny Callow, who's the CEO of African Gold Group, which is going to be updating a feasibility study soon. Second half could be a very important transformation for this company. You can get more information. They're on Twitter, African Gold Group. You can go visit their website. Is there any other Danny, ways that they can come?
Yeah, Jeb, you've frozen. Hopefully everybody can hear me. So we're on Twitter, we're on LinkedIn, we're on Instagram. We're very active on the social media front. My contact details are on all of those. So, and I'm typically will answer most emails that I receive. So I would urge people to get on the social media platforms, get onto the website, get hold of myself or Daniel, and you know, ask the questions that maybe I haven't managed to answer today.
Well, hopefully we'll have more to discuss as you have more news, and as we get the updated feasibility. And hopefully we'll have more to update shareholders in the coming weeks and months ahead. And I look forward to helping out to make sure that people hear this story and understand what's going on in West Africa right now with the gold price and the so much interest, institutional interests coming into this area. And this is a company that's been overlooked, but I don't think will be for much longer. So thank you, Danny, for being here with us today and for giving us an introduction to your background as a mining engineer, as a mine builder, and the aspects of this company that shows how undervalued and what a gem it is in Mali, in a jurisdiction that we've followed. And we've seen so much interest coming in recently from globally into this jurisdiction, into this low cost. You know, that's the key, is the low all-in sustaining costs in this jurisdiction. So thanks, Danny, for giving us the introduction to African Gold Group, which can be traded as AGG on the TSX Venture.
Thanks, Jeb. Really good to chat to you, and look forward to giving you some more updates as they come out.